Reese.
Wonderful. Thank you. And it's an absolute pleasure to be here. So I'm Reese Merrick, Managing Director for Middle East and Africa at Ripple. And Ripple really positioned in the market now as a digital asset infrastructure provider. As you mentioned, probably best known for our payments product, Ripple Payments, which utilizes digital assets, notably XRP, to make cross-border payments faster, more transparent, and ultimately a fraction of the cost compared to the traditional methods. But we have expanded our offering over the last few years. So we now provide digital asset custody infrastructure, which essentially offers financial institutions, fintechs, crypto natives a secure way to manage and store their digital assets. We work with some of the largest FIs globally, like HSBC, DBS, BBVA, and of course, we announced our partnership with ABSA back end of last year, who will be utilizing our custody solution. We've expanded with a couple of additional acquisitions last year as well. We acquired Hidden Road, so they were the largest non-bank prime brokerage provider, now known as Ripple Prime. Treasury management solution company called G Treasury, now known as Ripple Treasury. So really, we're kind of building, the building blocks across infrastructure to really kind of, serve all the needs of the institutions that we're interacting with. In terms of how we engage with stablecoins, and probably, very pertinent to this conversation, due to the demand that we saw on the Ripple side through our payments product, we actually issued our own USD-backed stablecoin just over a year ago, and really, the design for that was to be the institutional grade stablecoin. So from our perspective, and when we look at it, it comes down to three things: trust, utility, access. If we look at trust, we are one of very few that are actually regulated under the New York Department of Finance in terms of license. And, why does that matter? I think it matters because they have such strict regulatory oversight, and that's essentially, paramount as it relates to kind of institutions adopting stablecoin technology. So every RLUSD is backed one by one by US dollar deposits or cash equivalents. We have monthly attestation reports for our reserve to just to have that transparency in the market. As it relates to utility, RLUSD essentially was purpose-built for enterprise. So it's natively available on the XRP ledger, which was built for payments. So anyone utilizing on sending RLUSD has the ability to settle transactions in seconds at a costing, a fraction of a cent. We did also make it available on Ethereum as well, just to ensure we had that broad accessibility across the ecosystem. And then as we lastly talk about access, we're certainly, very focused on making it accessible for institutions in, the markets who need it the most. So, if we look at Africa, we've established partners with Yellow Card, as well as Chipper Cash and Vala for their customers and institutions to be able to acquire RLUSD. So plenty going on, and I'm very excited for this conversation. Thank you.
Rob?
Thanks, and good afternoon and good morning to those out west. So I'm Robert Downs. I lead the digital asset team here within ABSA's corporate investment banking. We set up this team about 3.5 years ago, obviously understanding what was happening in the broader crypto market and the financial services ecosystem, looking at how blockchain and DLT tech could actually speed up and improve financial services. I think we're well past the point of people saying, is it going to work? Is it not going to work? And we've been looking at a number of different use cases. Reece mentioned we're actively working on bringing a digital asset custody proposition to market for our corporate and business clients in the first instance. We've been looking at a number of different areas around tokenization and exchange-traded products. We spend a lot of time, obviously, working with our clients, but also working with some of the regulators to understand how the regulations are shaping up. And I'm sure we'll talk a bit about regulations as we go through today's webinar. And of course, looking at stablecoins and tokenized deposits, huge growth opportunity. We absolutely understand and recognize how they could disrupt our business, how they could benefit our business. I've been impressed so far at how all the panelists so far have avoided saying banks are expensive. They're just extolling the benefits of stablecoins more broadly. But we recognise that there's a big opportunity for us to also reduce the cost of services, improve the speed of services for our clients, and we're very committed to being part of that. As banks get more involved in this ecosystem, and I'm sure we'll touch a little bit on it as we go.
According to DeFi Llama, total stablecoin market cap is now north of $300 billion. Reese, can you break this down for us? What does this actually mean? I mean, how many types of stablecoins are there? Why are some larger than others in market cap? And why might one choose to use one instead of another?
Thank you. So yeah, I think absolutely, through 300 billion market cap, which is a, huge milestone. And I think it's up close to 80% compared to where we were 12 months ago. And I think that's, it's more exciting from where I sit about where we're headed, right? Because, while the market is just over $300 billion today, I think, major institutions like Citi, for example, and many others are forecasting that will be kind of, 2 trillion kind of plus, by 2030. So again, I think what we're witnessing here is the, establishment of primary gateway for the entire digital economy. And as the ecosystem matures, as we're seeing, we certainly believe that demand for, stable, liquid, and highly regulated stable coins is no longer a nice to have, but is an absolute necessity. I think touched on it a few times already today. If we understand the US dollar dominance, I think over 90% of all stable coins in the market are USD denominators. And why? I think when you look at global commerce, access to dollars is paramount. I think it's the world's most trusted medium of exchange. It helps users in emerging markets mitigate local currency volatility. It certainly has acted as a critical on and off ramp between traditional finance and crypto. I think more broadly, if you look at cross-border payments and the ecosystem there, I think over 50% of all payments that are settled globally are actually settled in US dollars. So a portion of those payments are actually settled outside of the US. So therefore, when you think about the corresponding banking network, you think of the delays, the fees. If you're an SME and you're moving funds from Africa to the Far East and your payment is going via the US, it's quite an inefficient way to actually move money. So I think actually we'll start to see that hockey stick growth, certainly as more firms lean in. You mentioned there's obviously quite a big disparity in terms of usage. I think I would say Tether is certainly early first mover advantage, I would say for sure. They're the staple as it comes to retail users, traders, and so on. And I think obviously they have a huge amount of the market share. On the Ripple side, we kind of saw that there was a bit of a gap on the institutional side, which is why we again launched ROUSD, where customers are kind of coming to us, whether they're financial institutions or fintechs, and they actually want the rigor of enterprise grade finance to be able to use stable coins for payments, tokenization of real-world assets, and kind of DeFi protocols there. And we kind of believe that having that rigor in terms of regulatory backbone and also the transparency will allow the adoption to grow in the trillions as we approached 2030 there.